Well, Dan, let's bring in Victor Shum now, Vice President, Energy Consulting at IHS Markit, joining us here at the SGX. You say that what's unfolding with respect to the coronavirus is the biggest negative oil demand shock for oil since the global financial crisis. That's a pretty big call.
Well, it has been instant demand destruction in China. And what's bad about the situation is that there is no alternative source of demand growth to offset the demand destruction in China. So even though oil prices are up a couple of percent today, oil prices have dropped by more than $10 per barrel since the beginning of the year. So the market recognizes the damaging extent of this coronavirus on oil demand.
How do producers then mitigate that pullback in demand? We've, of course, been talking a lot about the OPEC Joint Technical Committee meeting to perhaps discuss some sort of production cut in the next few weeks or so. Will that be enough to maintain and stabilize oil prices?
Well, there's a lot of pressure, obviously, on the OPEC Plus alliance to do something about supply to prevent further drop in oil pricing. But then the technical experts in OPEC, they have a difficult a task. They can't decide on what's going to happen to the spread of this coronavirus, and they can't really estimate the extent of demand destruction. But ideas of further cuts up to 1 million barrels per day have been discussed, and I think that the oil ministers in OPEC Plus recognize there is a need to cut. The question is the amount, and when should they cut it now, ahead of the previously scheduled ministerial meeting in early March.
Yeah, and for how long? Dan's got a question for you.
Victor, how much would be appropriate to counter the impact that we are seeing on demand?
I think at least 500,000 barrels per day. Our estimation is that if China is successful in containing the virus by March, then we estimate the demand to decline in China by 440,000 barrels per day in the first quarter, year on year. But then there are ripple effects on other Asian markets. So Asian jet fuel demand will likely flip into the negative territory in the first quarter. And so, we are seeing, demand destruction likely 500,000 barrels per day and beyond. And that's really in the best case scenario if we assume the containment to be successful by early March.